Hi, this is Naheed Memon. I'm the CEO of Oracle Power PLC. As part of our regular Q&A update process, we've received a number of queries and questions from our shareholders. We're very grateful to you for your support and your interest. I'll try and answer as many as possible and read out the questions and then also my responses. Questions with regards to the green hydrogen and renewable energy project. First, the RNS mentions that the FEED study will follow the grid interconnection study submission. So can you provide a specific target timeline for when this phase will begin and how long it's expected to take? FEED is the front-end engineering design, which is commissioned when investment is secured. This is because the investors confirm the design and scale of the project, subject to the financing acquired and confirmed buyer's demand as well, for the molecules in this case. We expect this phase to be completed in the short to medium term. Second question. With discussions underway with state-owned companies for potential equity in joint development, how is Oracle balancing the need for funding with maintaining meaningful ownership and influence over the project? And then could this partnership model impact the project financing timeline? Discussions are underway to secure funding for the significant project. Oracle does expect to maintain an interest in the project, but management control and influence will surely be weighed against the benefits and potential premium from divestment. And then, contrary to what the question alludes to, it is expected that this partnership model will in fact expedite financing. Third question. Are there any specific negotiations underway with potential offtakes, and when can we expect more clarity on this aspect? Discussions with potential offtake partners are commercially sensitive, and we're not really permitted to disclose the details of these discussions unless we have consent from the counterparties. Fourth question. What is Oracle's strategy to mitigate potential bureaucratic delays in the approval process? And are there measures in place such as regular government engagement to expedite feedback and approvals? So we believe this is in relation to the green hydrogen and renewable energy project. Oracle engages with government bodies regularly to mitigate potential delays and addressing concerns early in the process. And we hope these engagements and collaborations serve to expedite approvals. I'd like to point out here that some approvals in the recent past have been achieved well in time. For example, we had applied to the Ministry of Irrigation for water for the green hydrogen project. Then we submitted our ESIA study to the Environmental Protection Agency in the province, and we received an approval for that well ahead of the timeline that we had even stipulated. So we believe that we do try very hard to ensure that we get the approvals in time and sometimes ahead of time. Questions received for the Northern Zone project. The first question. The RNS mentions that further drilling is planned before a maiden MRE is announced. So can you provide an estimated timeline for when the shareholders can expect the next MRE and details on the purpose of the additional drilling? Further drilling is planned to enhance data for the maiden MRE, and we expect to commence this soon, and we will update the shareholders. And the shareholders can expect updates once this drilling concludes in relation to the results and how that progresses. But we expect this to be executed in the first half of 2025, at least the first drilling. Next question. What are the next key milestones for the Northern Zone project, and how will these drive progress towards the mining lease approval? So the key milestones for the Northern Zone include completing further drilling, as I just mentioned, to establish the resource estimate by getting as much as data as possible. And with regards to the mining lease, we have already submitted the report for the mining lease approval, and we expect to meet all the regulatory and operational requirements for the smooth progression of the project. Now, the next set of questions that we received were with regards to the Blue Rock Copper project. First question. Are there plans to define an MRE at Blue Rock Valley in 2025, or is this still considered an early stage exploration project? Well, we've just announced the acquisition, we have done some initial work, and this is early stage. And the first task here is to define the mineralization that extends from the underground mine workings. Second question, the RNS mentions multiple gravity targets and the upcoming geochemical sampling program. Can you clarify which zones will be prioritized for drilling based on these findings? Well, we can't clarify targets yet for drilling. We have gravity targets, and once we have the geochemical sampling results, this should allow us then to rank targets for drilling. Third question, given the discovery of multi-mineral targets, is Oracle considering a strategy shift towards prioritizing higher value commodities, example gold or uranium over copper and silver, or will exploration proceed across all commodities simultaneously? Well, all work programs and the assay results are always analyzed and reported for multi-element mineralization, so all commodities are assessed. Whilst the focus of the company is currently in copper and gold, we continue to assay for all commodities, including uranium. The focus will be refined based on the results from the programs as we move exploration forward. And this project, this is very exciting, this entire tenement, so we look forward to updating the shareholders as we progress. The set of questions received for Thar Coal. First question, the RNS mentions a potential full or partial divestment of Oracle's mining interests. So can you provide more details on the rationale for this decision and the expected time frame for any potential transactions? So the potential divestment, full or partial, of Oracle's mining interests in Pakistan is part of the company's strategy to optimize its asset portfolio, unlock value, and reallocate resources to focus on our core growth areas such as mining and some green energy projects that we have undertaken. The decision here is driven by the need to balance funding requirements with maintaining strategic control. So the time frame for any potential transactions will depend on ongoing discussions with interested parties, and updates will be provided as these developments occur. Next question. How does Oracle plan to balance its clean energy strategy with coal to gas liquid plans under CPEC, particularly in light of its divestment discussions? So these projects are aligned with a diversified approach to energy development that we have now taken. The divestment discussions are related to Thar Coal mining interests and not energy. Oracle intends to maintain a focus on energy growth, ensuring that capital raised from any divestments can support its energy ambitions. Next question, you have talked about divesting the Thar asset. Can you give more details how this would work for the Thar solar and coal to power gas projects? Is there an option to partner with whoever buys the coal mining rights, example, K Electric, or could the projects be moved? Well, we're considering the mining project, divestment of the mining project, but not the energy, as I said, or the power projects, which include the power, coal to gas liquid. And of course, we are open to discussions with partners for any of these energy projects. And that also includes K Electric. And the next question, in regard to the statement in the last RNS, the board intends to divest wholly or partially. Have we received any offers for Thar, and how many interested parties are there, and what value can be realized? Well, to this I can say the discussions are ongoing and we're engaging with some interested parties, but these discussions are market sensitive and we're not in a position currently to disclose further. We will certainly update when a firm understanding is reached. Next question. Can you clarify what a partial versus a full divestment would entail in terms of shareholder value? Will any proceeds from a divestment be reallocated to support clean energy projects, or are there other strategic priorities for this capital? Partial divestments refer to selling a part of the project and maintaining an interest as opposed to a complete sale of the project or asset in question. And proceeds from any divestment will be allocated to maximizing shareholder value, whether it's dedicated to gold or copper exploration or a focus on supporting our clean energy projects or pursuing any other growth opportunities aligned with Oracle's long-term vision. Then we receive a number of general questions, and I'll go through some of these. First question, following the recent capital raises, does Oracle foresee further equity raises this year, or will current funds support the next major project milestones? While current funds are expected to cover planned activities, future equity raises will depend upon project progress and opportunities to make strategic divestments of certain interests. And any decision will, of course, prioritize minimizing shareholder dilution whilst we continue to advance Oracle's projects. The next question is, Given the recent share price performance, is Oracle working with brokers or advisors to strengthen institutional outreach and maintain perception? Are there additional steps the company is taking to address shareholder concerns regarding the long-term value creation and attract ESG-focused investors? Well, Oracle has plans to strengthen its institutional outreach by engaging with well-positioned advisors in 2025. Oracle is committed to transparent communication and highlighting its long-term strategy and aligning its projects with the ESG principles in general. So, we are exploring initiatives to attract ESG-focused investors for our clean energy projects for sure. All right, next question. Given Oracle's diverse portfolio, are there any resource constraints, technical or financial, that could delay progress on one project due to developments in another? And if so, how is this being mitigated? Oracle is mindful of potential resource constraints across its projects, but there isn't much technical interdependence and parallel development mitigates financial risk, and the company prioritizes development based on project stages and value. The next question, has Oracle considered issuing periodic non-price sensitive operational updates to maintain engagement and mitigate negative market sentiment during longer phases of regulatory or technical processes? We have traditionally been issuing non-regulatory quarterly reviews to provide investors with a snapshot of progress during the period in question, and we continue to provide these to the market. Next question. Would Oracle consider hosting a live Q&A session rather than a pre-recorded one to improve transparency and foster direct shareholder engagement and enhance confidence and trust in the CEO? For sure, Oracle is always open to exploring ways to enhance shareholder engagement and transparency, and this approach will be considered, and I've made a note of this, and we will consider this going forward based on your feedback and, of course, what is possible for us to do in this regard. It will be done. Next question. At present, there still appears to be no confirmation regarding the remaining 613 million outstanding warrants. Originally, the exercise price for these warrants was set at 0.07 and 0.17. Could you please clarify what these remaining warrants will be repriced at, or confirm if they will be repriced at 0.25? I would like to refer this question to the RNS of 12th December 2024, where it stated that the prices of these warrants, i.e. 0.07 and 0.17, are reduced by 21.9% and not to 0.025. And I think this should provide the required clarity. Next question is about whether I am aware of the valuation and how we continue to be positive about all our projects by saying we've made significant strides, but nothing has materialized. And it also goes on to say, yes, projects of this magnitude may take time, but it has been 6 years and counting. First, the company does understand and appreciate the frustration that can arise when such large projects take time to materialize. And for a company of our size, these projects are in fact very big. So that frustration is acknowledged. But our strategy has evolved during this time as well. And we have moved from coal to power to green energy and also gone into metals exploration as dictated by the general market sentiment towards coal. So developing projects like Thar involves navigating processes including regulatory approvals, partnerships and financing, which can extend timelines beyond initial expectations. So while the company does acknowledge your concern regarding the timelines, we do remain committed to delivering results and maximizing value. And as soon as material developments occur, we will communicate, and we continue to communicate to the market. The progress we make is also adding value to the projects. Can you explain how long this is to me? You can keep saying that the share price will recover. It has plummeted in the last 6 years, wiping off value. The question is about how long this plummeting share price situation will carry on. Once again, your frustration is acknowledged, and which is keeping in mind the value of the share and its decline over the last few years. So whilst the market cap has been higher, we've moved away from just being a single project company which hadn't succeeded at that point, and now we're building projects with expected long-term value, and the potential that these projects have, and we're building these in challenging conditions. As I said, 6 years ago, we were a single project, single jurisdiction company. And of course, although this is not an excuse, but we have to recognize that external factors and sector challenges have influenced our valuation. But once again, we remain committed to delivering the milestones and rebuilding confidence, which will drive growth. Once again, there's a question about the share price, its decline, and the timelines, and how soon will we see a result which will increase shareholder value. So responding to this, I'll say that, while progress on large-scale projects does take time due to external factors which are beyond the company's control, we are taking concrete steps to advance each initiative. And we do recognize the importance of action over words, and the board's focus remains on delivering tangible results as quickly as possible. We have delivered in the form of forming a potential JV and a farm-in, which has helped us progress a Northern Zone project to a situation which is hopefully going to deliver revenue for the company. And we want to be able to firm further such engagements in the shortest period of time. We have a commitment to transparency and with our shareholders and with the market at large, and this is a matter that we and our regulatory advisors takes extremely seriously. So all the relevant information released to the market is objectively reviewed and is deemed to be accurate, verifiable, and understandable within various commercial parameters in which the company operates. Whilst we cannot provide exact timelines due to factors outside the company's control, once again, we continue to remain committed, and we will continue to provide detailed updates to shareholders as soon as developments are made. There's a next question about getting some projects over the line, and I think I've already answered that we have demonstrated that we are able to close out a project, and hopefully we should be able to make some announcements in that regard, especially with regards to the Northern Zone project. And that too reflects our strategy of meaningful partnerships and finding lucrative and timely exits for the company. The question is about shareholder value and with regards to the share price. My response here is again our continued commitment, the progress we have made. Here I'd also like to point out that not just for the Northern Zone project, but we also formed a JV for the green hydrogen project with the Office of His Highness. He's invested directly in the project and he continues to do so. And so we've actually managed to develop this project with just investing 30% of the development cost so far of this very, very significant project. And this would not have been possible if we hadn't formed this JV with his office. So we do manage to advance very large, significant projects, minimizing our exposure. Next question is about attending seminars across the world at the company's expense, and we understand that PR is important, etc. But this question is about how these seminars or these conferences are being funded, for example, and also then asking how many of these exhibitions or seminars have I attended or anyone else from the company has attended in the past few years. Well, I can confirm that in the last 1 year, I have not attended more than 2. I was invited to one, and one was in London, in fact, to which I was invited. So we are very, very, very mindful of our budget, and we only do what we consider most necessary. And yes, these conferences and seminars can sometimes be useful, but not at all times. So it's really a case of selecting the very few which we believe might bring the most benefit to the company and hence to the shareholders. Again, very selective, very discerning, and to this question I can actually say that no, this is not the business we're in. We don't do this. In fact, most of these conferences and seminars, people might even get upset, but frankly, I just turn them down. So that's where we stand on that. The next question is, how close are we to a financial close? Well, I'm not sure which financial close is being referred to, but let's just say any. So as I said that we are a multi-project company, and different projects are differently positioned along their development pathway. And of course, we just focus on delivering value either through a financial close for that particular project or through an exit. And we hope that we can achieve this soonest in one of our WA projects in Western Australia. And of course, for the other projects, we have been discussing exits, potential divestments, etc. All those are synonymous with what is probably being referred to as a financial close, which is either the project gets going or the company finds an exit. In either case, that's an exit for the company from that particular project, having made some money out of it. That's the general idea. The next question is about our cash position, and are we likely to raise finance again before cash is realized from any one of our projects. So the company's current cash position is outlined in our latest financial statements, which is available to the shareholders. And here I'd like to reiterate, we judicially manage our capital, carefully allocate to operational activities and corporate costs to ensure that the company continues to move forward with adequate resources. And whilst we expect to crystallize the value of certain projects and start to generate revenues soon, the company may require additional financing depending upon at what stage our projects are and how we are expected to then advance these projects. Then, of course, the last question is again about indication of short-term shareholder value. To this, I can say that there are multiple value triggers expected over the coming months. We believe that any number of these triggers can be, maybe, a catalyst for a potential significant re-rating of the shares, and we are working towards that. That was the last question. Once again, I'm very grateful to everyone. Thank you for your support and for your interest.